Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the more bearish scenario where we're looking for still a bounce towards the upside and then another leg towards the downside after we finished a three-wave corrective structure to the upside labeled as a WXY, where wave Y hit the 0.618 target at 64.6k, nicely respected as you can see, which is a trend-based fib extension taken from the low to the high of W to the low of X. Now after this wave Y, we then look for this move to the downside to be an impulsive structure, a 5-wave move, 1, 2, 3, 4, 5, preferably not yet finished, preferably still looking for another leg to the downside in this wave 5. And what we do like to see is price creating lower lows here on decreasing volume. So between this wave 3 and then eventually a wave 5, we like to see volume moving towards the downside. Now after a 5-wave impulsive structure to the downside, we then label it as a wave 1 or A in this particular scenario. Look for a 3-wave corrective structure to the upside in a wave B or 2, and then another leg to the downside in a wave C or a wave 3. Looking at support to the downside, we have first of all a daily, as you can see over here at 57.5k, and below the daily we have these two blue boxes, the first one being 54.6k to 55.3k and the second one 52.3k to 53k, and as you can also see we are currently at support over here, but preferably in this impulsive structure to the downside we still see another low, because I am never a big fan of a wave 5 that only wicks below a wave 3. So I don't like to count this as a wave 3, 4 and then a wave 5 and then finished, just because this is a wick, and it is a lot nicer if you get a solid impulsive structure where you actually have a couple of candles closing way below this wave 3 here to create a solid wave 5. Now on the chart you also see the 0.618 at 61.7k taken from the end of 2 to the local low over here on the chart, the end of then your wave 3, where this low would be part of a potential wave 4 for a more sideways corrective structure in 4 before another leg down. Now the reason this 618 is important is because it is an invalidation for your wave 4. So if price would move to the upside and touch 61.7k, wave 4 is invalidated, and it therefore increases probabilities that this is a 3-wave structure in an A, B and a C wave move, which would be bullish, as then the probabilities increase for price to sooner or later take out this high here at 65k. The more bullish scenario would be what you see on the chart here, an expanding flat in an A, B, C, where preferably your C moves below your wave A, which is most common, below 56.1k. Then look for signs of strength, proof of support, and price moving to the upside impulsively to create new highs. Now what lowers the probabilities for this scenario, however, compared to the other scenario, this one here, is time. So what you can see is the two vertical lines on the chart, a 5 and a 6 fib time taken from the start to the end of this first move to the upside, comparing this structure up with the sideways range that we have here. Now when you count this structure here as an expanding flat, a 3-wave A, 3-wave B, 5-wave C, and then look for continuation, it means that this ABC expanding flat is a structure of a wave B, X, or 2. Now let me explain. This move to the upside is counted as either a wave 1, a wave A, or a wave W. And then this flat structure has to be counted as either a wave 2, a wave B, or a wave X, and then you look for a wave 3, C, or a wave Y towards the upside. But you can see that this wave 2, B, or X is very long because of the 5, 6 fib time on the chart. For a wave 2, your common time target is between the 3A2 and the 2 like 3 fib time, but the 5 is quite extreme, and moving to a 6 fib time makes it incredibly unlikely you are looking for a wave 1, 2 and then a wave 3 to the upside. So that would then arguably increase probabilities for, if you do get a flat, a wave B or a wave X and another move up to be a wave C or a wave Y, which in the end would actually be bearish, as well as then after C or Y you still expect to move towards the downside. Now, a longer sideways structure in time that reaches a 5 or a 6 fib time is indeed more common, arguably common quote unquote, for a wave B or X, but even for a wave B or a wave X, a sideways structure that is 5, 6, and eventually 7, 8 times longer than your first move up, your A or W, is not something we like to see. And in Elliott waves, this is called ratio analysis and of course also time analysis, which is one of the chapters in the book Elliott Wave Principle by Frost and Prechter, link in the description. But by all means, the price action of a wave C is similar to what you're looking for in the other scenario here, which is an impulse to the downside, as a wave C is also a 5-wave impulsive structure, 1, 2, 3, 4, 5. But you want this wave C to move below wave A. That is by far most common. If it doesn't happen, you talk about a running flat, A, B, C continuation to the upside, but a running flat is the rarest pattern out of the flat family. But after this C, you then look for a continuation to the upside, right? A bigger bounce, but at least the beginning of this move is very similar to what you're looking for here in a wave B or a wave 2. Difference is that in a wave B or 2, you look for a 3-wave corrective structure to the upside and then another leg down, while after a flat preferably, you look for 5-wave impulsive structures for continuation to the upside. But on the short term, the price action between the two scenarios is very similar. Now finally, I like to go through a couple of channels. These channels are very interesting and following the Kennedy channeling technique, which is actually something very relevant for Elliott waves. What you see on my chart here is a base channel, and this is a base channel taken from the high to the end of your 2 to the end of your wave 1. And what you like to see is a wave 3 to move out of your base channel, which clearly happened, a wave 4 to come back to your base channel, and then eventually a wave 5 to the downside. Now, as mentioned, we did come back to the base channel, very, very nicely respected, and then move to the downside, creating a new low. But preferably from an Elliott wave point of view, only a wick here, labeling this as a 3, this as a 4, and this as a 5 is not so nice, right? Preferably we don't just have a wick for 5, preferably actually close a couple of candles for a wave 5. So arguably still looking in that case for a wave 4, as long as at least we don't hit the 0.618 at 61.7k. And also we don't like to hit the upper trend line of the channel here. So that is something that we have to look out for, but at the moment you can see this channel is very nicely respected for then a potential 4 and another drop down in a wave 5. Now what you see here is a trend channel, and a trend channel is taken from the low of your wave 1 to the low of your 3 to the end over here of your wave 2. Now keep in mind, we are talking about this impulsive structure to the downside, right? 1, 2, 3, 4, 5. Okay, so in this case, you want a wave 4 to move outside of your trend channel, which of course clearly happened. We moved towards the downside here and then started to move sideways, moving out of this channel. So that is also something that we like to see in an impulse to the downside. And then finally, we have the end channel, and the end channel is taken from the end of wave 2 to the highest point that I have here on my chart, for this being a potential wave 4. And then you look for another 5 to the downside, where preferably your wave 5 is ending in the lower half of the chart. And if we then finally look at the probabilities of the different scenarios, then on the 4-hour time frame, the probabilities are higher that we are here looking for an impulsive structure to the downside, looking for a couple of 4-5s, where preferably your impulse is not yet finished and you are looking for a 4 and another leg to the downside in 5. So we create some closed candles below the low that we have over here instead of a wick. Seeing this wick over here makes me think that we are still inside wave 4 price action. Of course, we know the invalidation for wave 4, 61.7k, important, as well as keeping an eye on the upper trend line of the base channel. Now also keep an eye on the support boxes for support to observe the reaction, as after a 5-wave move we are looking for a bounce towards the upside, which of course can be traded. We are currently at support. That is absolutely something that I recognize, and therefore also I do keep an eye on the 50-minute time frame and look for signs of strength. But I also know that from an Elliott wave point of view, another low would be nice, and we do have a daily here at 57.7k, and as mentioned in the video earlier, we also still have these support areas down here, which are interesting areas for price to hold and then look for signs of strength. Now, by all means, what I personally like to see either here, either at the daily or at the lower support boxes, would be for price to stabilize, create a range, but not only a range, I want on a 15-minute or higher time frame, I want to see structure to the upside. Would be nice if you actually invalidate a bearish impulsive scenario as well by touching the top line of the channel or the 618, and then see continuous bullish CVDs as well, right? That is something that I'll at least keep an eye on, as I like to see some signs of strength. And this move locally here can still very much be an ABC flat structure, which is, by the way, common for a wave 4 as well, creating an A, B, and then an impulsive move up in C to take the high and then still drop. So I'll be definitely observing local price action, but I'm also aware of the potential of another drop. On the 30-minute time frame, generally not a fan of wave 5 being a wick of wave 3. Another low would work well also with the channels. I hope that this video was helpful or valuable to you. Please check out the brand new complete Elliott Waves Guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.